Okay, recording this video after close of trade Thursday, the 26th of March 2020. Just gone 4:43 p.m. Chicago time. Do hope you are doing well. So, first of all, just a big thank you to everybody who's been sending very kind messages over the last day or two. Well, looks like after Monday's video, where I was saying this is an important bottom being made, we're going to have a short covering rally. A whole bunch of you got on board that trade and made good money, so that is good. Got to say, the last few days have been pretty good for me too. Got out of that long E-mini trade. Actually got out of that yesterday, but today, this morning, took profits on my long euro, long Canadian dollar, and long orange juice trade. So I'm flat at the moment, and I'm probably not going to trade on Friday because we are in a dangerous phase of the market right now. We're in the phase where we are pulling in the suckers. Whenever we see kind of a lot of amateur activity, they're usually doing the wrong thing at the wrong time. We have had a very nice little bounce from the lows. If you go back to Monday's video, it explains exactly the setup and why this 2060 level was important, and we kind of broke into this uptrend. But you can see that we've run into today's activity a whole bunch of amateur bars up here on the 15-minute chart with Rambo patterns. Rambo stands for a potential reversal of an amateur breakout. So this is amateurs leading the way up here, and that makes it kind of suspect. And we've overshot resistance on the intermediate time frame. We've actually got a resistance here on the lowest time frame. It just happens to be printed underneath this, and we put in a little pullback there. Tiny little pattern kind of showing, there we go, pullback in an uptrend on the 15-minute chart. So that's going to go off with Friday's trade, and then at some point we're going to put in cyclical resistance here on this highest time frame. So the amateurs missed the low. They're chasing the market right now. We've had a strong day Wednesday, strong day Thursday, kind of closing on the highs. And Friday trend tends to be positive up days, can be rangy as well. So Friday's range is kind of a little bit elevated. I wouldn't be surprised about that. And what that'll do, it's sucking in players right now with the strength that we got that are buying, thinking that they missed the low. And then over the weekend, that kind of positive news on the market will suck in a whole bunch of people who will trade it Monday morning and buy in, kind of desperately chasing this market, which will lead to the next kind of push down and a test of these lows. And hopefully cyclically that'll all kind of work out. So the 15-minute chart will put in an end of trend. We'll, on the highest time frame here, we'll put in resistance. We might go through a wiggle on the intermediate time frame, so a support and resistance kind of print on the intermediate time frame. That might be required before we kind of roll over and go see. As I've said, I've been looking for exhaustion sell on the 15-minute chart on the way down to mirror the exhaustion buy that we had here. What this volume patterns that we've had in here, first of all, short covering rallies with exhaustion pattern here, that's getting the move going. I wouldn't say that's kind of ending the move, but anyway, we've got a bearish divergence right on the zero line. We'll go to make a flush kind of signal there, but I'm still looking for that exhaustion sell on the downside, and that could, come with a test of the lows, and it could come with some bad news. So let's kind of wait and see what that is. Just going one time frame up from the 15-minute chart to the 45-minute chart. There we go. We've overshot our intermediate time frame. We're coming up to resistance on this intermediate time, overshot the lowest time frame, coming up to resistance on the intermediate time frame here, and the amateur bars kind of leading the way at this point with exhaustion buy. So it'll take a day or two to kind of roll, I'd have thought, and psychologically that Friday into Monday's kind of good news sucking in amateur buyers into Friday and Monday would be a good kind of trade to then kind of unleash on the downside, freak everybody out and get an exhaustion sell. So been talking about the intermediate time frame. catching this move on the way down. So this is the daily chart of the E-mini. We broke through resistance, days ago, and I said we were likely to be caught by resistance on that intermediate time frame. It did get in. You have to go down the different time frames in order to narrow in and dial in that turn. So we did that. We've got that bounce, and we've got exhaustion sell here. So yesterday I had a subscriber, George, email me just pointing out that we've got bullish divergence on the at ES.D chart. We haven't seen it on the at ES chart. Sometimes you do have to kind of finesse these a little bit. We have got different indices and different ways of looking at the indices. There we go on the at ES.D chart. There's the bullish divergence kind of come in here, and we've got that cyclical support coming. We've only got 1 day of it here on the .D chart, but on the at ES continuous chart, I think we had 3 days kind of down there. So it's an important level, but I still think we're going to go for one more kind of test back down into those lows, and that's kind of setting up over the next few days. It would actually line up nicely with another push to the upside on gold. So at the moment, gold, which has been totally winging around with these just unbelievable ranges, and this is a day trading vehicle right now. This isn't a long-term vehicle with these kind of huge swings that we've had, but a sell-off kind of Monday, Tuesday, something like that would just a little bit of weakness next couple of days, but then kind of playing into some strength as people rush into gold, as that kind of panic selling kind of goes in again, and it would just round out this kind of topping out move here. Same deal with the 30-year bonds chart again. Maybe a little bit of weakness over the next couple of days as we kind of test those highs, but then when that sell-off comes, it would play into a pushback up in bonds and put in a bearish divergence pattern. So everything is kind of lining up a little bit. Just quickly, this is a 60-minute chart of the currencies, the major ones, where we can look at cash forex market instead of the futures forex market, like putting these on the euro, British pound, Aussie dollar, Canadian dollar, Japanese yen, and Swissy here. They kind of flipped around. These three are obviously US dollar versus Japanese yen, Canadian dollar, Swiss franc. These ones are euro or Aussie or pound against the US dollar. But what I'm looking for, all of these kind of work together, is when those turning patterns kind of happen. And the highest time frame, you can see this thick line here, it's lining up to come together on these three as tops on the euro and the Aussie and the pound, and as bottoms on this chart of the Canadian dollar, US dollar versus Japanese yen, US dollar versus Swissy, and so on. So again, that'll all kind of come together with that high in equities and the high in these currencies against the US dollar, and then that next kind of flush down will mean rush into gold, rush into bonds, rush into US dollar equities, kind of test down. So that's my kind of hypothesis over the next few days. So no need to be getting into positions Friday, possibly Monday. Kind of wait to see Monday and Tuesday's activity and to try and just pinpoint that kind of next turn on the way down. And I could be way too early on this. We could run for a few days, and it might be the latter half or whatever of next week. But just watch your charts, see where those turns kind of happen. Now on Bitcoin, just a really quick note here, because we've got a different pattern setting up on Bitcoin. You can see in Bitcoin, this is the 1440 minutes. So there are 1440 minutes in a 24-hour period, and this is useful to look at the BTC USD chart for volume patterns here. And I just want to note this on a daily chart here. You can see here we've got a V reversal happening in Bitcoin. After a huge sell-off, we had blue professional bars picking up on the lows and then chase it on the way up. And that looks like a V reversal pattern to me. It is different from the at ES pattern. Here we had all the blue professional bars kind of selling after the high was made, bang, bang, bang. On this exhaustion, on this low that we've put in so far, down at 2200, we've not seen blue professional bars kind of come in here. maybe with the next kind of push down, that's when those blue professional bars are going to come in, and we're going to get the exhaustion sell signal and so on. But it looks different than the Bitcoin pattern, so that's why I'm expecting, a pushback down in the E-mini. On Bitcoin, no, I actually think we're going for a V reversal here, and if you back it down to the 500 tip bar chart, which I talked about a couple of videos ago, we had 5,900 as an important level. After we'd put in this strength here, we went down, pushed down again, and we broke through that 5.9 level again. It's all strength kind of going on here, although we have some weakness happening here with, that was a triple pattern, triple resistance on all 3 time frames going on here, but it refuses to break down. If we break above this resistance on the highest time frame here on this chart, which is above 6.9 or 7,000, this could break into a really strong runaway move on Bitcoin on the upside, which would mean this is a V reversal, and it just hit those lows and then just powers on and kind of keeps going, and we don't test back down. So Bitcoin is not, I don't think, in the mood to test back down, but I think the E-mini and the equities market is. Anyway, just my thoughts on some charts, and good luck with your trading over the next few days.